Hello and welcome to another in the 10-Minute Tips series of recorded programs for credit and collection professionals. This program is titled An Introduction to Credit Insurance. My name is Michael Dennis and I will be the presenter today. Let's begin with an overview. Credit insurance is purchased to reduce credit risk. Credit insurance can provide coverage against political turmoil in foreign countries, as well as providing coverage against customer payment delays and customer payment default. Trade creditors can purchase credit insurance coverage for domestic accounts only, for foreign accounts only, or for both. Creditors can purchase credit insurance on a single customer or on multiple customers. Credit insurance policies typically include an annual deductible as well as a per-loss deductible or copayment in addition to the annual premium. Credit insurance is not first dollar loss coverage. Credit insurance is catastrophic loss coverage. Most policies that you purchase do not include coverage for every customer for which coverage is requested, and most U.S.-based companies choose to self-insure against bad debt losses rather than purchasing credit insurance. Benefits of purchasing credit insurance. The primary benefit of credit insurance is that it reduces the risk that you will incur a bad debt loss. As a result, the creditor company will have confidence to extend credit to customers and to applicants that would otherwise be considered an unacceptably high credit risk. In addition, having credit insurance gives companies the confidence to expand into new markets. Another benefit of credit insurance is that it will permit the creditor company to reduce its bad debt reserves. At the same time, with an insurance policy in place, the creditor's ability to borrow against its accounts receivable may be enhanced. In addition, having credit insurance may lower the cost of borrowing for the creditor company. Limitations of credit insurance. As I mentioned, credit insurance is not first dollar coverage. There's going to be an annual deductible. There's going to be a per loss deductible. There are going to be risks that are not accepted by the insurance company. There's going to be an annual maximum on the amount that is paid under the insurance policy, as well as dollar losses below a certain dollar amount that are not going to be covered at all by the insurance company. Most importantly, insurance companies will not cover all of the accounts for which coverage is being requested. Why? Because the insurance company underwrites the policy. The underwriters are not going to be willing to offer coverage for customer accounts that they consider to be an unacceptably high risk. Not surprisingly, you and the underwriters may agree that certain accounts represent unacceptably high risk. That's the reason that you're seeking to purchase credit insurance, and that's the reason that the underwriters are denying coverage on certain customers. Credit insurance includes an annual premium in addition to the annual deductible, and it is expensive. Credit insurance is not inexpensive. The trick at the end of the day for credit professionals considering whether or not to purchase credit insurance is to decide whether or not it makes sense for them, factoring in, among other things, the premium, the annual deductible, the per loss deductible, the exclusions, and in particular, the risks that they consider to be so important that they went out and sought to purchase credit insurance. If those risks aren't being covered by the insurance policy, it makes it a very difficult decision to recommend to the company that the company go ahead and purchase credit insurance. Reasons to purchase credit insurance. Here are some of the common reasons given for purchasing credit insurance. The bank requires you to do so. This assumes, of course, that you have a borrowing relationship, your company does, with the bank, and the bank is calling certain shots, and one of those requests or requirements from the bank is that you insure your accounts receivable. Another reason to purchase insurance is senior management thinks it's a good idea. Generally speaking, we purchase credit insurance to obtain necessary insurance coverage against catastrophic bad debt losses, the ones that imperil the company. Not the day-to-day ones that are covered by the bad debt reserve, not the ones that we expect to lose, but the unexpected catastrophic losses that could potentially even cause your company to fail. Generally speaking, companies purchase insurance when pricing and coverage as quoted by the insurance company is favorable to the creditor company, meaning that the benefits of purchasing the insurance policy outweigh the costs and the risks of doing so. Again, more generally, credit insurance gives you, as the creditor, peace of mind. Another tangible benefit of having credit insurance is that having the policy in place accelerates the decision-making process. And in addition, you have potentially higher profitability that is connected with the idea that you can more safely make sales to customers, including marginal customers, that you would have otherwise avoided. In addition, having credit insurance enables your company to offer more competitive payment terms. Additional reasons that companies purchase credit insurance include these. Purchasing insurance will give the creditor company access to information, insights, and intelligence from the credit insurance company about their existing customers as well as potential customers. This information, these insights, enable creditors to make better informed and faster credit decisions. Having an insurance policy makes your company more competitive. In other words, it makes it possible for you to offer open account terms when competitors cannot do so or will not do so. In addition, purchasing credit insurance gives you insights about political risks in certain countries that might prevent a foreign customer in that country from issuing payment to your company. An additional reason to purchase credit insurance is that the insurance company will do an analysis. They will assess your sales account concentration in certain regions or in certain countries and will identify potentially problematic country exposure risk to you. Consider using a broker. Credit insurance is a very complicated insurance product to purchase. Many creditor companies use an independent insurance broker. An independent insurance broker represents your company, not the insurance company. And in contrast, a captive agent represents only one insurance company, so he has the insurance company's best interest in mind. The good news about brokers is they can sell various companies' insurance products. Therefore, they can and will do comparison shopping to find the right insurance policy, the one that meets your needs. In addition, independent brokers tend to have a broader understanding of the kinds of policies and the features and the benefits that various insurance companies offer. And because they are commission-based, brokers have to earn your business every year, so they may be more motivated to continue to offer information and insights that benefit you and your company as it relates to managing credit risk. But more generally, an independent insurance broker is more likely to be able to find a policy that meets your company's unique needs. Pricing. Pricing on credit insurance depends on a variety of factors, including but not limited to these: the type and the dollar amount of coverage that's being requested. For example, the type could be just political risk insurance, or customer default related credit insurance, or both. The annual deductible clearly has an impact on pricing. Generally speaking, the higher the annual deductible, the lower the annual premium. The same is true of the per-loss deductible. The higher the per-loss deductible, the lower the annual premium price is likely to be. Another factor affecting pricing is your company's bad debt loss history. And arguably the largest factor affecting pricing is the risk associated with the customers that you want credit insurance coverage for. Thank you for your time and attention. I hope you found this presentation to be interesting and helpful. Have a great day.